Good morning. It's June the 16th, 2016. Time to kick off another trading day, and the overnight news wires are all a chatter with central banks did nothing, and they're really talking about the Bank of Japan. The EU has bought, 358 billion dollars worth of billion euro dollars worth of corporate treasuries last week. So the Bank of Japan did nothing. The Fed interpretation was much more dovish than they were in their March statements, April statements. Gone from one person seeing only one rate increase in one more rate increase in 2016, as opposed to 2 to 6 people, 6 out of the 17. So the Fed is dovish. I don't see how the Fed can raise rates. Also, their longer-term forecast talked about 3 interest rate bumps, not 6, 3 more. So that would take us in the 1% range for Fed funds when this is all said and done. And the real problem with the Fed raising interest rates is debt service. They can't allow interest rates to go to their historical norms of 5% average yield on the portfolio. That would take today's debt service from about $300 billion to close to $1 trillion, and that's the real reason behind it. So they've boxed themselves into a corner. Stagflation is what we're experiencing, and it's most likely to continue. We do have news today. CPI up 0.3, core up 0.2. That would match yesterday's PPIs. Jobless claims 270. Philly Fed plus 0.8. Current account minus 125B. It's that just about every month, and they say we are only going to have a deficit of 500 to 600 billion. That's baloney. They will figure out an accounting way to cover it up. Housing market index 59, which is where it has been the last couple of months. And natural gas inventories plus 66B. Why is it lower than 80? Hot temperatures across the United States. The news focus will be CPI, jobless claims, Philly Fed. Not a lot to talk about there, really. So I think it all boils down to will the selling in equities continue today. Direction of the ES trumps everything. You know, if Trump does make it to the presidency, it'll be interesting to see how the word Trump evolves from being one higher in rank, to it'll be an interesting play on words when it comes. Okay, 13.5 is where resistance begins. 13.5. So selling failure to take out 13.16. It's a reasonable trade. Then let me see, make sure I don't blow this. I had 13.5, 19 with a second sell 23 to 27. So I'd say failure to get through 16 is probably where we're going to be. Sell 2, 23 to 27. On the buy side, we had 5 to 9. Let them go a little bit lower. And then 29 to 1. Again, down to the direction of the E-mini when it's all said and done, in my opinion. Looking at the ZB, similar situation. First little resistance band is going to be basically 170 to 170.04. Got 7 to 11. And then 19s to 23s, which would be new highs. So failure to get through basically 8 to 12 would, I think, set up a nice short, and maybe 4. Maybe it's 4 to 8. We'll have to see how it plays. First little band of support is 20 to 24. So 13 to 17 by 1. 1 to 5 by 2. Gold made the 1300, no signs of selling. Brexit looks like it's 53% favor an exit from the European Union, and long term, I think it is the move. They're touting that gold hasn't been this high since, I think, December of 2015. Don't hold me to that date. We've got a pretty clean break in the market in this 1310, 1313 area right there. You can see maybe it's 1311. So we've got a seller at 10 to 13 right now, and then 15 to 20. So 10 to 13, sell 1, 15 to 20, sell 2. Don't really like the short side of the market, and we've been saying that for a long time. Why? Because of, it's just central governance everywhere. Here in the United States, they're going to solve the terror problem by banning weapons. The guy in San Bernardino could have been very, very easily flagged, wasn't on the terror watch list. The guy in Orlando, Florida, was not on the terror watch list. Give us more money, give us more agents, give us more time, and we'll solve more. These guys couldn't find their way out of a room with all the doors open and all the lights on. It's just, the incompetence is just, you can't even really comment on it. Yet, they will get more power, they will get more money. When it's all said and done, that's the default position. There is no opposition party. There's no one calling for sanity. Look what they've done previously. They've quarantined people, they've locked them up, they've shut the borders to certain types. It's just nuts, and that's where we find ourselves these days. Buy 1, 1305. Give or take. Buy 2, 1300, give or take. But these people will pontificate, and when it's all said and done, more money, more power, and our protection won't go up. And you vote an opposition in, somebody try to slow the process down, and they side with those causing the problems. Okay, the euro got hurt, and because of Brexit, like we said yesterday, the focus after the FOMC is out of the way is going to switch to Brexit, and it'll reach a frenzy in the weekend news. My guess is they probably still won't do it. There's a couple of polls that are out today, telephone polls, that are supposed to be critical or key. So let's go to the F1 screen and see what we're looking at. We broke the overnight support bands. Okay, you can see right here 112 is where we are. The high volume number is like 104. We have the start of this rally that took us up to 14.5. Came out of the 1150 area. So 1150 to 112 is where support is right now. And you have to maintain your long-term perspective to have a chance of making this work. So structurally, these two lows right here, basically at 30, and here we are at 10, so 25 to 30, sell 1, then our 40 to 50, Picking up this area right here, sell 2. Stops below 112, buy 1. Then 1175, buy 2. So I think 1150, 1175 is reasonable support. And more interested in the short side, obviously. Pretty hard to ignore that kind of selling. 112 is just the buck. It's a round number. 1175 is the next round number in the distribution. Okay, there's an article out someplace talking about crude going to 20 bucks on this next break. And could certainly happen, but I don't think so. The way that we started talking when crude started selling, that was the year and a half for the actual price to bottom, then consolidation anywhere of 1 to 3 years, depending on how deep it got and how bad it was. So we've been looking for a retest of 47 for a long time, and here we are. We are pointed lower, so 46.75, 47 by 1. 46 1/4, 46.50 by 2. Next high volume number, if we break the 47 level, is basically 46. There's your attractor. Like the short side better. Going to be hard to sell 75, so 50 to 75, sell 1. 48, 48 1/4, sell 2. Fundamentals say we should be much lower. Fundamentals don't count on any given day, but they do count over time, and that's what favors the short side of the market. And that's what we've been playing. Okay, the E-mini, again, is going to be down to how much will the Fed allow the market to sell today. And their ploy, or the way they've supported the market, is they've been there early, they've bought everything up, the market gets a rally, then it sells late in the session. And I think that's what we'll find again today. Looking at London, there's no compelling reason to be long the stock markets, like we said. Lack of central bank intervention, primarily the Bank of Japan. The Fed stance yesterday was taken as dovish, with more people seeing only 1 interest rate increase in 2016. The consensus has been 2 more interest increases in 2016. I don't see that as possible at all. The economy is soft. Fed's forward guidance on their economic forecasts lowered growth to 2%. So here we have inflation running 2 to 3%. We have growth at 2%. Stagflation. Our first experience with that was Jimmy Carter, way a long time ago. And what did it take to turn that around? Less government regulation, lower taxes. And that's what it'll take to turn it around this time too. So here we are, looking at the London split, 58. Looking at the spill from Globex from 60, so 57.50 to 60 is pretty good resistance. Would like, got a little P right here, we got a chance to put it on higher, but so 57.60, sell 1. 64, 69, sell 2. I'd look for some support right off the opening, 50.52 by the Fed, so not afraid to buy it early in the session. More interested in finding a place to get short, because I think what will happen is that the players that be will run stock market or equity prices down around the globe to scare Britain into staying in the European Union. And that's not where the votes are. The votes are from the people that are on the dole, so they're not really affected by that. They start screaming about taking away welfare payments and changing your way of life in London because of can't pick up the tab anymore, then they'd have a better chance of getting the votes that they need to stay. My guess is, based on status quo, and no matter how bad things are, you know how to deal with things as they are now, that they won't break from the European Union, but that remains to be seen. It's going to take a bit to get everything up and posted. I will be back with you as soon as possible.